market. Also, commentary coming in from Mukesh Ambani goes to many sectors. What does he say about the telecom space, where just a couple of days back the 5G spectrum auction has completed? The world is and country is waiting for 5G. What exactly lies in the new energy business? Also, retail, consumer sentiment, succession. So a lot of stuff is what the street wants to know from Reliance Industries Chairman Mukesh Ambani, and the commentary will be starting in moments from now. But before that, let's get in my colleague Soumit to sum up the factors from Reliance AGM today, and we'll take the coverage forward. Soumit? All right, so before we go to Soumit, in fact, some visuals have just started coming in. Mr. Ambani is right there at the dais, and he'll start talking. It's a very prepared, very extensively prepared statement, and the commentary has started. Let's listen in.
Ladies and gentlemen, good afternoon. Dear shareholders, namaskar. It is 2 p.m. and time to start the meeting. I welcome all of you to the 45th Annual General Meeting of the company. This meeting is held through video conferencing because of the prevailing situation. This is in compliance with the circulars issued by the regulators. The company has taken all feasible steps to ensure that the shareholders are provided an opportunity to participate in the annual general meeting and vote. Adequate video conferencing facility and live webcast of the proceedings of this meeting have also been provided. The requisite quorum is present, and therefore I call the meeting to order. Register of directors and key managerial personnel and their shareholding and register of contracts or arrangements in which directors are interested are available. This will remain accessible to the members for inspection electronically if they so desire. I wish to introduce, for the benefit of our new members, my colleagues on the board of our company. Shri Adil Zanul Bhai, Shri R.S. Gujral, Dr. Shumit Banerjee, Srimati Arundhati Bhattacharya, His Excellency Yasir Al-Rumayyan, Shri K.V. Chaudhary, Srimati Neeta M. Ambani, Shri Nikhil R. Meswani, Shri Hital R. Meswani, Shri P.M.S. Prasad, and Shri P.K. Kapil. All directors of the company are present at this meeting. Shri Alok Agarwal, Shri V. Shrikant, Chief Financial Officers, Srimati Savitri Parekh, Company Secretary.
You were listening in on the deliberation the committee was doing, and you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Financial statements and the secretarial audit report of the company for the financial year ended 31st March 2022 do not contain any qualification, reservation, adverse remark or disclaimer. Accordingly, the reports are not required to be read out as provided in the Companies Act 2013. Now, I will begin my formal address to the shareholders. My dear share owners, Namaste. A very warm good afternoon to each and every one of you. It gives me great pleasure to welcome you to the 45th Annual General Meeting of Reliance Industries Limited. Like the previous 2 years, this AGM is also hosted on a digital platform. The digital platform enables more shareholders from across the world to participate in the AGM. I miss the warmth and the bonhomie of our personal interactions. I sincerely hope that next year we will be able to switch to a hybrid mode which will combine the best of both physical and digital modes. Friends, 2 weeks ago, we celebrated Azadi Ka Amrit Mahotsav, the 75th anniversary of India's independence. A visionary Prime Minister, Shri Narendra Bhai Modi ji, in his most inspiring speech on August 15th, has given us a clear roadmap to make the next 25 years the most transformational in the history of our motherland. The Panch Pran, or the 5 imperatives he has articulated, will surely make India a developed nation by 2047. He has aptly described that the next 25 years is India's Amrit Kal, the era of elixir. Within the next one generation, India is set to achieve more than all the post-independent generations have collectively achieved so far. And Reliance is set to make a far greater contribution to India's prosperity and progress than we have done so far. Friends, the world has almost fully overcome the COVID pandemic. This is heartening. However, there is uncertainty again due to heightened geopolitical tensions and global risks. There is severe economic stress in many parts of the world. Rising fuel, food, and fertilizer prices are impacting everyone in the world. High inflation and supply disruptions are triggering recessions. Amidst this global unpredictability, India stands tall as a beacon of growth and stability. The government's skillful management of the pandemic and the pragmatic approach in dealing with the ensuing economic challenges have helped India emerge stronger than before, wiser than before, and more resilient than before. I would like to congratulate our Prime Minister, Shri Narendra Bhai Modi ji, for his far-sighted leadership, and our Finance Minister, Srimati Nirmala Sitharaman ji, for her exemplary stewardship in navigating the Indian economy through a period of unprecedented challenges. The most profound lesson that the world has learned from the pandemic is, greater the adversity, greater still is humanity's inner strength to conquer it, provided we care for each other. Friends, this prompts me to reiterate the core philosophy of Reliance, the philosophy of we care. We care for our employees and their families. We care for all our stakeholders, customers, shareholders, and partners. We care for India and all 1.4 billion Indians. We care for the planet and its people. It is the philosophy of doing good to do well. It is the philosophy to create greater value for others first. The ever-expanding circle of care enhances respect for Reliance globally and ensures its sustainable growth year after year, decade after decade, and generation after generation. Dear friends, let me now speak about the business and financial performance of your company in the year 2022. Reliance has continued to make all-around progress across its businesses. Our company became India's first corporate to cross $100 billion in annual revenues. Reliance's consolidated revenues grew 47% to 7.93 lakh crores or $104.6 billion. Reliance's annual consolidated EBITDA crossed the crucial milestone of 1.25 lakh crores. And in true We Care spirit, Reliance Foundation continued to benefit millions of people across the country. Reliance not only set higher benchmarks of serving the community, but also created business value and societal value on an unparalleled scale. Reliance's exports grew a massive 75% to cross 250,000 crores. We accounted for nearly 8.4% of India's merchandise exports in the year, up from 6.8% last year. During the year 22, Reliance continued to be the largest taxpayer in India. Reliance's contribution to the national exchequer by way of various direct and indirect taxes increased 38.8% to 188,012 crores. Reliance also set new records in creating jobs for Indians. Reliance added 2.32 lakh jobs across all its businesses, with Reliance Retail becoming one of the largest employers in the country. Friends, let me start with our digital services business, Jio. Over the past year, Jio has further consolidated its position as India's #1 digital services provider. Today, we have 421 million mobile broadband subscribers on our 4G network, and they consume, on average, nearly 20 gigabits of broadband data every month, which is nearly double their consumption from the year before. Inspired by a dynamic Prime Minister, Shri Narendra Bhai Modi ji's Digital India initiative, our country has seen the emergence and scale-up of multiple world-class national platforms which have brought enormous benefits and ease of living to ordinary citizens, like Aadhaar, a common national identity for 1.3 billion Indians, like Jan Dhan, a self-service bank account that has brought financial inclusion to over 460 million unbanked Indians, especially women, like RuPay, an indigenous payment card network with over 630 million cardholders, and like UPI, one of the most accessible digital payment system with a monthly volume of over 6 billion transactions, like Ayushman Bharat, providing health coverage to over 500 million Indians. Another example is our Prime Minister's path-breaking Startup India initiative, under which India has launched over 73,000 new startups in the last 6 years. They have collectively attracted nearly $63 billion of investment and contributed to the creation of lakhs of new employment opportunities. And we have the example of how India has used digital connectivity and digital platforms to stay resilient even during the COVID-19 pandemic. With both humility and pride, I would like to state that all these phenomenal accomplishments became possible because Jio built a world-class 4G digital infrastructure at the right time with sufficient capacity and offered it most affordably to every Indian to take India to global leadership. Let me now talk about Jio's fixed line network. Jio's high-quality, redundant, and always available fiber optic network is the information backbone that carries data traffic from every corner of India and connects it to the global internet. Today, Jio's pan-India fiber optic network is more than 11 lakh route kilometers in length, enough to go around the planet Earth more than 27 times. Over the past year, we also saw acceleration in the adoption of Jio Fiber, with 2 out of every 3 new customers choosing Jio Fiber. Jio Fiber is now the #1 FTTX service provider in India with over 7 million connected premises, a feat achieved in less than 2 years despite COVID lockdowns. But despite strong growth, India still lags behind the rest of the world significantly in fixed broadband services. With about 20 million connections, India is ranked a lowly 138th in the world in fixed broadband adoption. Unlike in leading nations, the vast majority of our homes, offices, and businesses have been deprived of the power of fixed broadband and ubiquitous indoor Wi-Fi, and consequently, the power of modern digital tools. This has to change, and change fast. Jio will change this. We will enable India to be among the top 10 globally in fixed broadband adoption. Friends, today I want to announce the next leap forward that Jio is creating in digital connectivity, especially in fixed broadband, and that is Jio 5G services. Using 5G technology, we can now deliver breakthrough increases in broadband speed, network capacity, and number of connected users, while dramatically reducing latency. With Jio 5G, we can achieve three simultaneous objectives. One, we can build on the success of Jio 4G by introducing an even more advanced version of our mobile broadband service. Two, we can accelerate the rollout of high quality, highly affordable fixed broadband services to hundreds of millions of locations in a very short period of time. And three, we can use this vastly expanded broadband availability to further stimulate the adoption of connected, intelligent solutions across all walks of life. Specifically, we can connect over 100 million homes with unparalleled digital experiences and smart home solutions. We can leapfrog tens of millions of small merchants and small businesses by empowering them with cutting-edge plug-and-play solutions delivered from the cloud. We can provide lakhs of medium businesses with the same digital capabilities that were historically available only to larger companies. We can accelerate the digital transformation of tens of thousands of our large enterprises and make them globally competitive. We can launch billions of smart sensors with connected intelligence that can power the Internet of Things and the fourth industrial revolution. With Jio 5G, we can connect everyone, every place, and everything with the highest quality and the most affordable services. In addition to meeting India's needs, we are confident of offering digital solutions to world markets. At Jio, we are energized by this vision. We are committed to make India the largest data-powered economy in the world, even ahead of China and the United States. Jio 5G will be the world's largest and most advanced 5G network. Most operators are deploying a version of 5G called non-standalone 5G, which is essentially a 5G radio signal that is delivered over their existing 4G infrastructure. This non-standalone approach is a hasty way to nominally claim a 5G launch, but this approach cannot deliver the breakthrough improvements in performance and capability that are truly possible with 5G. In sharp contrast, Jio will deploy the latest version of 5G called standalone 5G, which has absolutely zero dependency on our 4G network. With standalone 5G, Jio can deliver new and powerful services like low latency, massive machine-to-machine communication, 5G voice, edge computing, and network slicing. Jio 5G will be true 5G in every sense, and I believe that India deserves nothing less than true 5G. And through the recent auction conducted by the Department of Telecommunications, we have also acquired the largest and the most appropriate mix of wireless spectrum for 5G. And this gives Jio 5G a distinct competitive advantage. In addition to the 3,500 megahertz mid-band spectrum that is globally earmarked for 5G and the 26 gigahertz millimeter wave band for ultra-high capacity, only Jio has the 700 megahertz low-band spectrum that is so very essential for deep indoor coverage. And we are able to seamlessly combine these frequencies into a single powerful data highway using an advanced technology called carrier aggregation. This threefold advantage of standalone 5G architecture, largest and best mix of spectrum, and carrier aggregation means that Jio 5G will be able to offer an unparalleled combination of coverage, capacity, quality, and affordability. We are working very closely with all leading global smartphone OEMs, and we have their commitment that they will support Jio's true 5G in India. I firmly believe that digital freedom is the birthright of every Indian. Therefore, 5G cannot remain an exclusive service available only to the privileged few or only to those in our largest cities. To build our pan-India true 5G network, we have committed a total investment of 2 lakh crore rupees Jio has prepared an ambitious and the fastest ever 5G rollout plan for a country of our size. Within the next 2 months, that is by Diwali of 2022, we will launch Jio 5G across multiple key cities, including the metro cities of Delhi, Mumbai, Chennai, and Calcutta. Subsequently, we plan to increase the Jio 5G footprint month after month until by December of 2023, which is less than 18 months from today, to deliver Jio 5G to every town, every taluka, and every tehsil of our country. We will use our combined wireless and wireline assets to blanket the 3.3 million square kilometers of India's landmass with fiber quality broadband, connecting even those parts of the country where thus far satellite technology was considered the only option for connectivity. Friends, we are able to pursue our disruptive ambitions because of the unique technology, research and development capabilities we have developed in Jio. As I mentioned in our earlier meetings, we have indigenously developed an end-to-end 5G stack, which is fully cloud-native, software-defined, digitally managed, with support of even advanced features like quantum security. This is 100% developed by our own over 2,000 young Jio engineers working tirelessly for the past 3 years. We have already deployed this made-in-India 5G stack in our network with sufficient capacity to serve hundreds of millions of users from day one. Furthermore, Jio 5G is uniquely positioned to offer private 5G solutions for Indian enterprises at owners' economics. Friends, let me now invite Akash and Kiran on stage, who will talk about some of the exciting experiences that will be possible with Jio 5G.
Good afternoon, everyone. I am Akash Ambani.
And I am Kiran.
As we gear up to roll out Jio True 5G across India, let's take a look at a few with mobile broadband. Only Jio True 5G has the threefold advantage of standalone 5G architecture, broader spectrum, and advanced carrier aggregation technologies. Jio True 5G truly delivers breakthrough increases in broadband speed and dramatically lower latency. Let's see this in action with a speed test on Jio True 5G. Wow! We don't get 1 Gbps even on many of the fixed broadband networks in our country.
Since 2016, Jio 4G has unleashed a tsunami of digital applications and rich digital content across India. Today, over 80% of the data consumed on Jio 4G is in video format. With Jio True 5G, mobile broadband will shift gears yet again, and we can enjoy even more video and immersive content. That too, consistently in ultra-high definition quality, no matter where you are. This also means that you will get a dramatically superior experience when you use your favorite video streaming and video calling mobile applications. 5G will not only enhance all your current mobile experiences, but will also create new and first-time experiences that will only be possible with 5G. For example, for the first time, the ultra-low latency of Jio True 5G will enable real-time applications like cloud gaming.
All right, so that was the commentary coming on Jio, and the stock corrected from the top. We'll come back and continue our coverage here after this very short break.
It's not always about
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy, only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you participate.
Well, the 45th Reliance Industries AGM is underway. We'll keep cutting live to that and get you, sound bites from that. Mukesh Ambani so far announcing a 2 lakh crore rupee capex as far as 5G goes. His son Akash, when we were taking a commercial break, was on stage talking about the rollout. Ajay, we'll of course keep a close tab on that, but let's touch base with our technical guests as well on the markets.
Right. In fact, Nantara, just to mark the way stock reacted, and in fact, we were just starting the show, the stock ran up into the green, almost 1% in the green. It was a 3% intraday recovery after a gap down. But it appears that the 2 lakh crore announcement on 5G, announcement that they'll launch the services by Diwali and aim to cover the country, all the districts of the country in next 18 months, did not really please the street much, and the stock came down back. Look at that intraday graph on screen. Meanwhile, let's get in our technical analysts and understand. Vinay Rajani is here with us. Vinay, how did you look at the charts of Reliance Industries up till now, the commentary which has come in, and the reaction ahead and after the commentary came in?
Good afternoon and thanks for having me on the show. Yeah, so if we look at the Reliance recent development, if we go for the short-term charts, then I can see a double top forming around 2670. So 2 times it took resistance there and has come down. So that is a crucial resistance. Until and unless this 2670 is taken out with a rising volume, we cannot say that it is into an uptrend. So definitely these levels are right now into consolidation. And if Reliance holds below 2580, then it will be a downward movement, we can say, for the short term. So primary trend is up, but for short term, 2670 is a very crucial level to watch out for. Until and unless this Reliance industry crosses this level with the rising volume, there is a good possibility that it will come down. And the next support for the Reliance industry is around its 200 days moving average, which happens to be placed around 2590 odd level, 2490 odd levels. So yeah, right now it is into a correction mode, and unless 2680 is taken out, we should remain cautious.
In fact, Milind Vasudev is also with us. Milind, regarding this 5G related commentary, there's a pocket of the stock beyond Reliance which also gets active whenever 5G related commentary starts coming in. Tejas Networks, Root Mobile, HFCL. And this is loved by the trading community a whole lot. Do you have any of these stocks on your radar?
Good afternoon. Yes, we have one stock called Tejas Network. Though in today's trading session, it has gone up by 15%. But yes, it has given a fresh breakout. And this clearly suggests that there is a good upside momentum in this stock. The Prior resistance were at 573, and today early in the morning we had recommended to our clients at 585 levels, and fortunately we are up by 15% in this stock. We didn't expect such a drastic move in this stock, but we have given a target of somewhere around 700 and 725 levels.
Move in Tejas is quite interesting to see. Even HFCL is gaining 3-4%. These are traditionally seen as 5G plays. But let's also take a look at Bharti Airtel, because Bharti is also a clear competitor, and Mr. Ambani did mention a lot of shortcomings in other players' 5G offering and called their own 5G offering a much superior quality. Let's understand the charts on Bharti meanwhile. Vinay, can you check out how Bharti looks right now?
Yeah, so primary trend of Bharti is also bullish. There is no doubt about it. But if we were to go by the weekly charts, last week Bharti actually made a long leg doji candlestick pattern, which is a reversal pattern, and the support was there at 718, which is right now it is trading around that level only. So I think we need to remain cautious in this stock also, because last week's close was not that convincing, and it is just a profit booking. I am not saying that it is trend reversal. Overall trend remains bullish, but this stock can correct towards the next level of let's say 690, which happens to be the 200 days exponential moving average for the counter. So this can also correct from here, and the resistance for the counter is placed around 754.
The call on Bharti. Let's take it forward on the markets then. After a good rebound, the market has got stuck in a range. 17,300 is maintained on the Nifty. Bank Nifty, we bring out Bank Nifty, and then we'll understand how to trade, because the first half of the session, in fact, Vinay, let me come to you. The first half, the trade was buy the sharp dip, and anybody who would have bought the market or Bank Nifty in the first 20 minutes of opening in a gap down was making money, and that trade has panned out. Maybe book some profit. From here on, is it becoming a shorting zone? What would you watch out for? How would you approach the market for the last 1.5 hour of trade?
So first of all, we need to see Bank Nifty. Bank Nifty actually has made a double bottom kind of formation today. The previous low was formed at on 23rd of August, when we saw a level of 37950, and today's low is 37943. So it becomes double bottom and short-term support also. If Bank Nifty were to break this level, then we can definitely expect further weakness in the index, and the next supports below today's low comes around 37,000 odd levels, which was the previous resistance, and now it can interchange its role. But this is a market where we are looking at many mid cap and small cap stocks are performing very well, and some are making 52-week highs and all-time highs also. So this is purely a, we can say, a stock specific market. Index may correct a bit, index may consolidate a bit, but I don't see any stock specific or sector specific across the board selling in the market. So there will be an opportunity in the small cap and mid cap segment. Index may correct a bit. So overall, I am not expecting a big upside right now in the Nifty as well as in Bank Nifty. Today, Nifty has seen a 9% short build up. So that can also trigger some profit booking further on the downside. So I am expecting that Nifty and Bank Nifty will remain subdued or will go down gradually. But mid cap and small cap perform. In fact, it will outperform the Nifty and Bank Nifty.
That's an interesting one. In fact, the broader markets are very active in trade versus the benchmarks, and that actually is a reflection of what the trading community is doing. Let's hear out some market views which we have gathered. Manish Tangi, he's a macro strategist, and then we'll come back and take the trading action forward.
The typical short trade or long trade would be what played out between October 2021 until June, June end that we discussed, which is macro actually starting to get worse because of high crude prices, emerging market currencies getting gaslighted again, including INR. And while I continue to think that India's setup from a pure macro and its microeconomics actually seem reasonable, and to that extent, Indian equity may not sell off as much, but still, we are more likely to see downsides than upsides. So to that extent, be a nuance short on on equity as well. I also see that, that will be the climax of bond, that in that period is when you will see peak bond yield, perhaps, going all the way to 8%.
So as an investor, what should be the tactical stance that you need to take so that you don't get caught on the wrong end of either side of the volatility?
Yeah, so if you're a systematic investor, you don't care, right?
Obviously.
Every month you keep putting in money through SIP or dollar cost averaging. If you're a speculator, then you ought to be, clear about this, that you're very likely to get whipsawed if you play momentum. So the reasonable strategy in this setup is contra. That whenever the IVs actually fall, whenever market becomes sort of complacent, actually pile a trade opposite of the market's direction. So that's the speculator's view. If you're an asset allocator, which is actually doing overweight, underweight on bond and equity, I guess it's still time to stay underweight equity, for some time to come, until, you have these clouds disappear with respect to, inflation's outcome. Trade, beyond what is seen appropriate, in the current monetary policy framework. And yet, once you compare this with what's happened in rest of the world, especially developed economies, we've sort of done pretty well. So to that extent, Nikunj was right in actually complimenting him that, in a sense, these guys have
done a good job. Yeah.
They've done a good job in actually not overreacting. So going back to inflation argument, actually, India also, because crude has sort of settled, could see that at margin over next 6 months, the first order effect of high WPI should start to fade and CPI should start to go down. But then my worry is, I've argued last time in June also with you that, in the run up to winter, crude would perhaps start to spike again for a variety of reasons that we can discuss. And that would mean that the second order inflation pain would begin again in India.
Let's also get in Mahentesh Sabard into the discussion. Mahentesh, do you see the reaction of the market much more mature right now? There was a big global turmoil. I don't remember when I saw 1,000-point cut on the Dow over the weekend, Friday, in fact. But this morning, the way markets have rebounded from lows, if you look at indices, mid-cap and small-cap action, as Vinay was also talking about, is quite surprising. How do you see that?
Yeah, it is indeed is very surprising. Basically, I wouldn't call it as a major reaction of the market. Somewhere I find that this seems to be resembling a bear trap. Bounce backs in certain stocks, and then eventually you will see the falls happening. While I do expect the market to gradually fall down, if not today, probably over the next couple of days. But the fall may not be too large, considering the fact that we are already from the. If you look at the last 2 or 3 days kind of performance, so to that aspect, I would from that respect, I would expect the market to trend downwards, and this appears to be a bit of a bear trap in terms of so many stocks going up.
What do you make of the universe of the stocks which gave very strong results in the Q1 and commentary was also good? Many of them are making fresh highs right now. Some auto, some manufacturing names, couple of capital goods. Anything interests you there?
So I think you named one sector, which is the capital goods sector. That's now really growing up. I would say the capex spends of the corporates are likely to sharpen up simply because their debt levels are very low. They have come off the pandemic lows, and there is a lot of unfinished capex that needs to be done for many corporates, both of the maintenance kind as well as the expansion kind. So capex is the theme that one should look at when it comes to the stock. And within the capex sector, there are a whole lot of segments. Particularly, you should be looking at heavy engineering capex. where the likes of those on the green energy side, like wind turbines, let's say, or let's say on the electrical distribution side. So these are the companies that you should be looking at from the capex point of view. Unfortunately, on the capex side, we don't have much growth happening on the oil and gas side. We don't have much growth coming up on the road or rail infrastructure. When I say much capex, because these are sectors which have received their doses of capex already. So incrementally going forward, we should see capex mostly of the heavy engineering kind, and we would look at stocks related to that.
So you're going to look at capex-led stocks. Kumar Mangalam Villa has, of course, called it the Mahakumbh for capex. That was earlier, following it up with the AGMs, for example, Ultratech recently, which said $8 billion. Okay, I'm going to shift gears now. And, Mantesh, this is something I want to talk to you about. Defense stocks, what a tear they're on, right? From the PSU pack as well, the private players. What should be a strategy here?
I think the limited number of stocks are available on the defense side, particularly the ones which are recently listed are the ones who are really doing well simply because they have an order backlog, huge order backlog. Otherwise, the traditional defense stocks that you encountered are not really doing well. And mind you, I'm not so gung-ho about defense stocks because from a budget perspective, if you notice that the defense capex has been gradually winding down as a percentage of the GDP. And there seems to be no breakthrough available in terms of any great capex that will get induced. The only background that we have for defense stock is that we have the OFBs, the Ordnance Factory Boards, being reconstituted, split up into separate companies actually, and some of them could eventually come for listing or privatization. There could be opportunities related to that. But otherwise, on the defense side, I would be a little careful and look at only those stocks which are recently listed.
Okay, so you're not sounding very excited about defense. You've, of course, seen Masdog, HAL, all of them have a big run-up in trade. Okay, let's go back to the 45th AGM of Reliance Industries. Mukesh Ambani is now talking about Reliance Retail.
Partner and integrate with all brands, small producers and MSMEs so that we can source from the widest range of quality products for our customers. We extend our product and design capability to MSMEs so that they can offer products of the highest quality across different price points and enhance the choice to customers. And fifth, strengthen our logistics and supply chain capabilities, establish a strong technology-enabled supply chain capable of moving products across geographies in India in the most efficient manner, eliminating inefficiencies and waste, pass on the benefits to our customer. I now invite Isha as the leader for the retail business to provide an update on the retail business.
Thank you, Chairman. It is my privilege to give you an update on the progress that Reliance Retail made last year. We served over 200 million registered customers, equal to the entire population of the UK, France, and Italy at Reliance Retail's physical stores and digital platforms. We welcomed 520 million walk-ins to our stores, a growth rate of 18% year-on-year, and 4.5 billion visits to our digital platforms, up by 2.3 times year-on-year. Our digital commerce platforms continued its growth with average daily orders of nearly 6 lakh orders being delivered every day, an increase of 2.5 times over last year. JioMart, delivering in over 260 towns, was rated as India's #1 trusted brand for online groceries. JioMart works on a hyper-local delivery model and is India's largest deployment of an omni-channel capability. We opened over 2,500 stores in the year, and that takes our store count to over 15,000 stores and an operational area of 42 million square feet. We built an extensive supply chain network with modular design and best-in-class automation. We doubled our warehousing and fulfillment space to 670 million cubic feet, linking supply locations with demand centers across the country. We generated employment for more than 1 lakh.
Well, the next of kin, Isha Ambani, she's been looking after Reliance Retail. Akash Ambani was on earlier. He's now, of course, the chairman of Rel Jio. We'll keep getting you live updates from there. We're going to take a short commercial break. We do that with the Sensex hanging on to 58,000, the Nifty at 17,324. More when we return.
Get smarter. Bharti AXA
Betted on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to...
Welcome back. As we continue to cover the Reliance AGM, as more important stuff keeps on coming in, we are also having Mahesh Sabard, Milan and Vinay alongside for trading ideas and how to read charts. Milan, let me come to you on Patanjali. Patanjali stock, which is earlier Ruchi Soya and now Patanjali Foods, today put out on exchanges that they are having road shows and they are meeting investors. The stock was active today, even in a bear market, 2 to 3%. Can you check out the charts? Where is the stock heading? It appears that a lot of positions got created in today's session looking at that announcement in a bad market. But it appears that around the 1200 mark, there is a hurdle. What does the chart say?
If you see for last 3 months, this stock is just hovering in a range of say 1,000 at the lower end and 1,200 on the higher side. Now, today we have got a good move in this stock with higher volume. Now, this suggests that yes, upside momentum is there in this counter. Even it is outperforming the benchmark indices, and RS is making a newer high. Even the momentum indicator, namely the RSI, is making a higher high formation. So this gives a clear view that this stock has got a potential to go higher. Now, once it clears, initial resistance is somewhere around, say, 1,225 levels. Once that level is being crossed with good volumes, then you could expect this stock to move towards, say, 1,300 and 1,350 rupees.
In fact, Mahentesh Sabarth is there. I'm sorry, by mistake I called him Mahesh. Mahentesh, please don't mind. I'll come to you in a moment. Okay, Vinay, what's happening in escorts? After the Kobuta purchase, the stock went into a very sideways kind of a, when the promoters got bought over by Kobuta. Now that sideways action appears to be, the stock is coming out, or is it coming out?
Yeah, stock is continuously making higher tops, higher bottoms, and the peer company is also performing well. M&M tractor making companies both are performing very well and hovering around their all-time highs. So definitely setup is quite good, and the auto index has been outperforming. So overall, I see some rate-sensitive sectors performing very well in the recent times, and the defensives like IT and pharma are struggling a bit. So I think overall, from the auto sector is expected to outperform, and from the auto sector, I'm expecting this escorts and M&M to do well. So overall setup is definitely a positive one, and we should not go against the trend. So trend is positive, and with the trailing stop loss, traders should continue to hold on the counter.
Okay. I'm going to come to Vinay for this one. There was one stock which at one point looked like it would defy the law of gravity. Not my words, Nikunj Dalmia's words. He had said that while describing this stock. And we were trying to figure out what exactly was going on. It is Tata Elxsi, and that stock for the week is down over 12%. It is now available at less than 9,000 rupees as well. What's your call on it, Vinay?
And its leadership team, led by Isha, would deliver exponential growth and become the largest segment within the group. I wish them all the very best. Dear shareholders, let me congratulate our oil and gas team for a spectacular turnaround, with production jumping 9 times and revenues crossing $1 billion. With 19 million standard cubic meters per day of production in ultra-deep water fields, KGD6 is contributing 20% of India's domestic gas production. With the MJ field commissioning, by end 2022, KGD6 would contribute nearly 30% of India's gas production and help meet India's growing demand, leading to an import saving of nearly $9 billion per year. This is a major source of clean and affordable energy for India, particularly in times of a significant global energy crisis. Dear shareholders, our O2C business crossed rupees 5 lakh crore in annual revenues. The EBITDA of our O2C business crossed rupees 50,000 crores. We are committed to maximize oil to chemicals integration and convert our advantageous feedstock streams to value chemicals and materials. I'm pleased to share that over the next 5 years, we will invest rupees 75,000 crores and expand capacities in existing and new value chains. First, in the polyester value chain, we will build one of the world's largest single-train PTA plant of 3 million tons per annum capacity at Dahej. We will also invest in 1 million ton a year PET plant at Dahej. Both PTA and PET will be targeted for completion by 2026. We will also reinvest in polyester filament yarn and polyester staple fiber. Polyester expansion with a capacity of over 1 million tons will be completed in phases by 2026. Second, in the vinyl chain, we will more than triple our existing capacity by adding world-scale plants at Dahej and Jamnagar in India and the UAE. We target to complete 1.5 million tons of feedstock integrated PVC expansion at Dahej and Jamnagar in phases by 2026. We will also add capacities to make EDC and PVC at Ruwais, UAE, as a part of the Taziz chemical zone. This will be in partnership with ADNOC and ADQ and targeted at fulfilling domestic demand of the region. With these expansions, Reliance will be amongst the top 5 producers of PVC globally. Third, consistent with our vision for new materials, we will build in phases India's first and one of the world's largest carbon fiber plants at Hazira with a capacity of 20,000 metric tons based on acrylonitrile feedstock. We will commence acrylonitrile production next year and aim to complete the first phase of the carbon fiber plant during 2025. We will further integrate our composite business with carbon fiber to produce carbon fiber composites. Besides other applications, carbon fiber composites are also used to meet the rapidly growing lightweighting requirements for mobility and renewable energy. Thus, carbon fiber promises to be a multi-decade growth engine for O2C. Friends, Reliance has championed the cause of sustainability through circular economy and is a leader in India's recycling of polyester and plastics. We will strengthen our leadership position in PET recycling by more than doubling our bottle recycling capacity to 5 billion bottles a year. I am further pleased to share that our scientists have also developed pathways to produce biodegradable and compostable plastics to completely replace single-use plastics. Dear friends, Reliance has commenced its journey to become net carbon zero with a set of concrete actions. Let me present one such initiative being pursued towards replacing fossil fuels with renewable alternatives. We have extensively started consuming biomass as a fuel to produce green energy at scale. I am pleased to share that within a span of just 1 year, we have replaced almost 5% of energy consumption at the Dahej and Hazira sites by green power and green steam. Within 1 year, the renewable energy consumption at Reliance jumped by 352%. I feel confident that such initiatives, coupled with transition to renewable power for our O2C assets, will accelerate our journey to become net carbon zero. Dear share owners, I now come to our new energy business, our newest growth engine. An engine driven by our We Care philosophy for our beautiful and bountiful planet. The advent of the Industrial Revolution about 250 years ago triggered a continuous wave of economic growth across the world. But this growth has come at a great cost to our environment. Climate change has endangered the very future of both human life and every other form of life. Clearly, this model of growth is no more sustainable. Fortunately, technological breakthroughs have offered a reliable promise and a massive opportunity to mitigate this danger. I have always believed that businesses, especially large businesses, have a responsibility to solve the biggest and the most complex problems facing humanity. It is out of this sense of responsibility towards Mother Earth that we launched our new energy business last year. Decarbonizing the global economy will require multi-decades of investments in green and clean energy to the tune of $5 trillion per year globally. This also offers unprecedented opportunities for multi-decade growth. The sheer magnitude of this responsibility has made our new energy business far more ambitious, far more transformational, and far more global in scope than anything that Reliance has ever done before. Friends, I'm happy to share that we have made rapid progress. We have laid a strong foundation to realize our vision. We are well on our way to create a manufacturing ecosystem which will be fully integrated with secure and self-sufficient supply chains. It will be backed by world-class talent and capabilities built on the pillars of technological innovation through strategic partnerships. It will deliver modular, at scale, affordable, and the most modern green energy manufacturing business based in India for India and the world. These capabilities will enable us to replicate our success with our partners globally. Friends, last year I had announced setting up of the Dhirubhai Ambani Green Energy Giga Complex in Jamnagar. The work done so far has reaffirmed my conviction in solar energy and has provided further impetus to our investment thesis to establish 4 gigafactories. First, for photovoltaic panels. Second, for energy storage. Third, for green hydrogen. And fourth, for the fuel cell system. Today, I would like to announce our new gigafactory for power electronics. One of the key components linking the entire value chain of green energy is affordable and reliable power electronics. We are building significant capabilities in design and manufacture of power electronics and software systems, integrating with our capabilities of telecommunications, cloud computing, and IoT platforms. We will build this through partnerships with leading global players to provide most affordable solutions, meeting global standards of performance, safety, and reliability. In addition to solar energy, we are also actively progressing on bioenergy, offshore wind, and other non-conventional forms of renewable energy, and will continue to expand our manufacturing ecosystem. Let me further elaborate on progress made in building our manufacturing ecosystem. We have invested and partnered with leading companies globally in solar, battery, and electrolyzers. With each of these partnerships, we gained access to unique technology and know-how, and an eager and vibrant talent pool ready to disrupt the world. For solar PV manufacturing, we have acquired a 100% stake in REC Solar. REC brings 25 years of commitment to solar industry. It is a global leader in solar manufacturing, providing highest efficiency solar panels with heterojunction technology. It is a recipient of the prestigious Intersolar Award 2022, akin to the Oscars in the solar world, and has 1,400 plus employees globally spearheading innovation and manufacturing excellence. It has sold over 40 million panels till date for every application, including for rooftop markets in US, Europe, and Australia. REC is expanding its current 1.2 gigawatt annual module capacity to 1.8 gigawatts in Singapore. The technology for solar PV is constantly evolving. We have a defined improvement roadmap to stay ahead, targeting to increase the HJT module efficiency to 26% by 2026 from the current 23%.
Let's take another break, come back and analyze the commentary which is coming in and also the markets.
To earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy, only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Okay, so you've got, let's just do a quick check of the markets before we go across to Deepak Shenoy, who's going to be live with us now. So let's just do a quick check of the markets, and you've got the Sensex holding on to 57,000, trying to make its way towards 58,000, 57,958 for the Sensex. Nifty, meanwhile, holding on to 17,308. Deepak Shenoy now with us. Deepak, 45th AGM of Reliance Industries underway. So far, nothing new as such. If you've been watching ET Now, you would know we had already prepared our viewers that there may not be any update on the IPO timeline for retail business or for Jio. But as of now, the only new number we really have is of 5G capex, 2 lakh crores. That's something the group has never spoken about.
Yes, as a as a disclosure, we own Reliance, so we're waiting for any announcements. Typically, the announcement should happen towards the end if there are any big ones. But we wanted more clarity on how eventually the businesses will be split and who will get to head them from within the family. I think that part. I mean, we've got some ideas, but if the company clarifies, I think that would be good. And Tara, but as much as we've heard today, they've got stuff in the energy space, all upcoming stuff that's coming in through capex that we've heard of earlier as well. They're talking of the silicon wafer business, which was, at least the specific details of it were very new to me. And there's some other parts where they're collaborating. I think recently they talked about collaboration for two-wheeler EVs as well. But no big, large announcement, like you said. Waiting for it. Let's hope it happens.
Well, like I said, if you've been watching ET Now, you would have already known that. We said that unlikely any IPO timeline for Reliance Retail or for Reliance Jio. That was source-based information. The second one, the markets really want some update on succession planning. Remember, Mukesh Ambani himself had said, it's time for the elders to make way for the youngsters and the next generation. Let's see if that is also going to be the end. Sources telling your channel, Mukesh Ambani very much remain at the helm of affairs. We'll just make it clear what the next gen's business is supposed to look like. Okay, we'll keep a tab on Reliance. We'll keep cutting back to the speech of Mukesh Ambani. Our producers are tracking it very, very closely. But Deepak, one thing we do need to talk about, and that is a fantastic recovery that we've seen in the markets. And do you think that now it's pretty much clear that the leadership is going to stay with banks till the year end?
It actually doesn't seem like that, to be honest. The numbers, at least from the banking front, to me, it seems like some corporate banks and some of the larger banks will probably do very well. We've seen that retail banks have struggled. Some of the smaller banks have also struggled. Interest rates have gone up, so you can imagine that NPAs in general, the pressure on NPAs should only be increasing rather than decreasing. I also feel it's more likely that the manufacturing, defense elements like that will do better in the coming weeks and months rather than the financials, where there is a larger impact both of local interest rates going up or generally currency changes, and also international interest rates being spiked because of inflation or whatever else that causes foreign central banks to increase rates. I think you should be a little wary of the banking system for the next 6 months. But, I think good banks will last it out and last it well.
Right. Deepak, one quick word. Then we'll take some tech checks with our panelists. On the new energy giga complex, till last AGM, we knew that there are multiple factories coming in. But this time there was an incremental mention, a foray into electronics, all the electronics which are required for new energy, because clearly, the new energy business, implementing it at the customer end, it appears that it will require hardware which will not be very traditional in nature, be it the new energies, the renewables, hydrogen, green energy, hydrogen gas and all of that. And they want to set up an entire complex to manufacture that hardware. That bit came in as a bit incremental. What did you make of it?
I think it may not necessarily be just for the battery management systems or the electronics that go around the energy dissemination piece, but could also extend into pure creation of from silicon. I haven't seen the full details yet. I've just seen bits and pieces, but it seems to be a fairly deep you look into a gigafactory for manufacturing from silicon, which could actually be extended to non-energy based manufacture, whether it is boards, whether it is chips. We don't know yet. It might be a combination. It might end up being a recipient of something where even the government is trying to get more chip manufacturing in India. So perhaps there's an incentive that comes in alongside that, and Reliance is looking to perhaps take advantage of it in a more broad way. I don't have the details, like I said. I think I have to go through the speech later, but given it's a gigafactory, it can't be for something really small. So it's most likely going to be for a much broader application base. Again, I'm on the outside. I don't know much, so
they're calling it
we'll have to
power
take some
electronics. Anything which Reliance does is power in it. So let's see. Let's wait for details to come in. In fact, we are just 15 minutes away from market closing, and hence it's important to take a call. Dow futures are actually indicating at a negative reading. Milan and Vinay are with us. Vinay, how would you like to trade from here on? Does it make sense to carry a BTST position? If yes, what are the areas which look strong? Or you would want to see market overnight and then take a call tomorrow morning?
Obviously, we have seen a good gap down opening today, and tomorrow is there would not be a big gap down. But yes, index is closing on a weak wicket, both Bank Nifty and Nifty, and we have seen short build up happening in the Nifty today. So index wise, there could be a lower downside. You can say expect a further downside. But as far as sectors and stocks are concerned, I think there are good opportunities on the long side also. The stocks like the FMCG sector is doing very well. So Pidilite is closing on a very strong note. So I think Pidilite can be looked at for the BTST for 2 to 3% gain.
So that's the BTST idea that is coming in. Vinay, the one stock I also want to ask you, because we've talked about the leadership of auto. Now this one has been a little bit all over the place, but now hitting a new 52-week high. Escorts.
Yeah, so Escorts, as already discussed, it is making higher top, higher bottom, and stock is making new high. So obviously, price and volume action indicator oscillators, every technical setup is suggesting that it should continue to do and outperform. M&M is also looking good. So these both stocks are expected to perform very well in the coming times, and auto sector entirely looking good. So index-wise, it is outperforming, and Escorts and M&M out of this particular index is expected to do well. So as I said, that market is expected to remain stock-specific and sector-specific. So I'm expecting auto to do well, and Escorts can be held long with a stop loss of, let's say, traders should keep a stop loss at 1860 and keep it on the trailing basis. So as and when stock keeps on rising, we have to raise the stop loss also. So that strategy can work out for the traders.
I want to ask one question to you, Deepak, and that is, it's the announcements are now coming in the sense that, you'll have WhatsApp being integrated with JioMart. There's also, another announcement that has come in as far as foray in power electronics, glass, and POE film scope. I know Ajay asked you already about power electronics, but the question is now, with all of this happening, what will it mean for an India Mart? If I were to talk about WhatsApp and JioMart, if you were to talk about, electronics and glass, POE film, what kind of other stocks will it impact?
So I think electronics, there's not that much known yet. So that's one thing. But JioMart is perhaps more, targeting people of the order of Amazon and Flipkart rather than what India Mart or anything else. But India Mart is mostly B2B. It's not a B2C player, so they're not going to get affected so much. They have an ownership in Just Dial, which is also a semi B2B listing player. So they might eventually, if they did something with WhatsApp with Just Dial, that would then, kind of come into India Mart territory. But right now they don't, and Just Dial doesn't have the depth of and the breadth of reach of a lot of the things that India Mart does. Having said that, they do have businesses in India Mart's territory, like part of the logistics areas. They have some of the other listing services for B2B players internally as well. So I don't think it's direct competition, and this announcement is largely focused on people like you and me buying off of the JioMart on our WhatsApp. I don't know how good that will be. I don't find, I don't know how that experience will be. I should try it once and then figure out if this is better than the Amazons or not, or Flipkarts or not. And but that, I think that's where the challenge is. The other spaces, well, we don't know yet. I mean, I don't have specific details on who it will compete with, especially electronics. The Gigafactory announced there. But I think most of the competitors will be in the private market space, unlisted, rather than in the public market space.
Fair point. Just 10 minutes away, and we need to take some market calls actually. Vinay called it weak closing. Milind, what are you recommending the way market is closing today?
See, there are three stocks which are in my radar. The stocks which I have discussed was Tejas.net. It is closing on a very strong note. The second stock, Vinay also has mentioned about Escorts. I would keep a stop loss of 1880 for that. Since it is trading all-time high, so there is no resistance or overhead supply for that counter. So Escorts is looking good on the charts, and we expect still 7 to 8% move from current level. The third stock which I am liking is Aegis Chem, currently trading at 294 or 295 levels. One can keep a stop loss of 270. We expect the stock to test the levels of 320, 340 on the higher side.
Sushil Choksi is also joining us now. Sushil, afternoon. We have to ask you about Reliance, top three things. It appears by the screen today, only that much I'll say, that market was a bit disappointed. Did anything stand out from the commentary for you? Couple of 2-3 things.
Good afternoon, Ajay. Thanks for having me on the show. I think the AGM has more a roadmap for what Reliance would emerge as, whether in O2 oil to chemical or alternative business, retail and telecom. And he has indicated what he is going to do as a capex and what is his vision for the division individually would look like over a period of next 5 years of investment phase and where the company would go. So if shareholders or the market was anticipating that he would announce a demerger or a new listing for Jio and retail, which has not come. But I suppose that is a plan which everybody is aware with private equity and large global corporates who have invested in those divisions. It is bound to happen. It's a matter of time. So if you ask me from a roadmap perspective, he is not disappointed. But from a demerger perspective, if you have expectation, it disappoints you on the day-to-day activity of buying, selling of stock. But if you are taking a 5-year vision, this current AGM speech, once people have read it well rather than only hearing on TV, I suppose an analyst world and long-term shareholders would indicate the weakness led by global markets would throw opportunity at Reliance, looking at all the divisions plans which he has laid out in current AGM speech.
Choksi, I would like to say, please watch ET Now more. We had already informed our viewers last week. It was a source-based story that, very, very unlikely that any timeline for the IPO of Jio or Reliance Retail would be announced or any demerger. Shameless plug over there. Okay, but we are about, 8 minutes to go as far as the final closing goes. And, there are stocks that are standing out. Let's discuss some of them. What's going on with Apollo Hospital, Vinay?
So after a long time, we are seeing that Apollo Hospital is crossing its 200 days moving average on the upside, and volumes are almost average than last 3 days average. So, higher than the last 3 days average. So yes, after a long time, we have seen some outperformance, and this can continue. I see that today's low will act as a strong support, which happens to be around 40.86. So that can be kept as a stop loss. And on the upside, we can expect a target of 4450 odd level. So I'm expecting 3 to 5% upside in the stock. Primary trend has been positive, but after running correction, stock has resumed its uptrend. So keeping today's low in mind, which is around 4086, one can remain long, and we can expect an upside of 4 to 5% towards the level of 4450.
Deepak, I was asking a guest earlier on in the show, we didn't have you live at that time, and I was about defense, we are, of course, seeing India make an attempt to become an indigenous hub. We've seen the orders also from the Navy and the Army. But having said that, if you look at a mass stock today, it's a new 52-week high. We've all been seeing the run-up on HAL. My colleague Meghna Mittal today has reported that the government will also be talking to, getting feedback from investors that these two stocks should become OFS candidates as well. What's your take when it comes to defense back and also, with the run-up that we've seen in stocks, has that opportunity been missed?
So in general, I think these are very small stocks. So other than BEL, which is reasonably big, but most of the others that you mentioned are relatively small in size. Some are PSUs. Therefore, there will be a challenge in terms of, for instance, the specific thing around HAL and I think one of the other guys, there's actually this concept of the government actually going to that may be looking to divest more stake that will increase supply in the market. Much about defense is about government procurement. These are typically 3 to 5 year orders. So if you've analyzed how things like Astra Microwave and some of the other companies that source from or have customers in the defense area or DRDO or space, there is a certain amount of time before a lot of these order mechanisms start to become reality, and sometimes there are 2 or 3 years. I don't know, in many of these cases, investors tend to lose patience because management keeps telling them, listen, these are 5-year things. We'll get the order only in 2024. And then in 2027, we'll have to start delivering. And that typically becomes a much longer wait period. Receivables increase and so on. So I think we shouldn't rush too much into trying to buy these stocks right now, given also that government finances are not so good that they will be able to, increase defense budget substantially next year either. So I just say we have investments in the space. We're kind of happy some of these stocks have gone up, but I think we should be a little circumspect that this is not like, the next big story starting right today, and giving PSU companies 50, 60 times earnings might not be the right thing for a healthy portfolio.
Pull up Coromandel International. That is one chemical company which has been doing pretty well as far as the results go. It is ending at days high. Pull up the last 1 week 10-day graph. You would see that there was some institutional selling which had come in, and from that around 1,020, 1,040 the stock has, yes, that's the block deal which happened around 1,000 rupees. The stock has rebounded sharply. Milan, do you track this Coromandel and the way stock is ending today in the face of big selling?
Last week only we saw, last 2 weeks we are seeing this counter under pressure, and it made a low of somewhere around 980, and now it is bucking up the trend. Yes, one can hold this stock with a 50-day moving average as a stop loss of say 1,020, and on the higher side it has got overhead supplies at say 1,070 to 1,080 levels. Once that level is being crossed with good volumes, then you could expect this making a new all-time high, and it will go towards 1,100, 1,150 levels.
Just a few minutes left for the closing. So let's just take a stock of all the stocks that are buzzing in trade. Watch out for Reliance Industries. Turned negative a few minutes ago. Mukesh Ambani was giving out the clear-cut role of the children. Remember, he had said in the past that the elders will have to make way for the youngsters. The clear-cut role is being stepped out, like we told you at ET now, by Isha, Anand, as well as Akash. Watch out for Reliance Industries. Sensex has reclaimed 58,000. That's, of course, a very crucial level to watch out for. Remember, the rupee had also made a low today. As Reliance was announcing that it's going to have 5G ready by Diwali, you saw pressure coming in on Airtel. So, Airtel and Vodafone had dropped as much as 3% as far as that goes. The topping gainer today looking like Britannia. Maruti Suzuki chugging along, celebrated 40 years in business yesterday. Apollo Hospital, we got to the technical view on it as well. After a while, you've seen the stock trying to break the 200-day moving average. Some of the other stocks I thought I would highlight. You've seen the entire defense bunch go up. This stock has been one of the top gainers. Naukri is down over 6%. Tata Elxsi defying the law of gravity, falling down by about 5% in trade. Escorts has made a new 52-week high. You've been seeing the return of the leadership with the auto pack. It's a good one there by Escorts as well. Ajay, what's streaming out for you?
The big thing is that the way market has positioned itself for defensives, and that is why you saw a big rally as far as the consumer basket is concerned. You named a few of the stocks. It is actually helping the market, but overall, market got a bit of a knock today in last hour of the session. Otherwise, we would have been closing much higher. The other thing which stood out in today's market is the advanced decline. The first hour of trade, we saw severe pressure as far as the broader market is concerned. But then, just after an hour, along with the market, the broader market started recovering much faster. So the outperformance in the B group stocks and the smaller stocks, small and mid cap, actually stands out. So it may appear that market is ending weak, but look at the small cap index, less than 1%. The mid cap and the small cap, other indices almost coming in flat, just 0.5% cut. Whereas Nifty Sensex is 1.5% cut. So this relative outperformance of mid caps is something you need to keep an eye out for. With that, it's a break with the market. We'll come back again tomorrow. Thanks very much for watching.
In association with BH.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear.
Afternoon, and you've tuned into the brand new edition of Your Trades with me, Cheryl D'Souza. Along with me, I have Shrishti Sharma. Very good afternoon. Good afternoon to you, Shrishti. A lot of news flows through the course of the day, no doubt. The spotlight was on RIR AGM.
Well, yes, absolutely. And today was a very interesting day, Cheryl, because we started at near day's low
and from that we have seen a bit of a recovery into the markets, while Reliance AGM was the show stellar in this particular market. But let's talk about the index. So we did ended near the day's low point, wherein 17,300 was something that we managed to claw back to, while that was a 100 points recovery in Nifty, while for the Bank Nifty it was a 250 points recovery, and we managed to close with a 710 points of cut near 38,276 marks. While coming to the sectors, it was a clear show on that particular front, wherein IT was the top dragger in today's market, wherein Nifty 50 top 5 stocks were from the IT pack, while the FMCG was on the winning streak. But like you mentioned that the Reliance was the showstopper today, it was the AGM, and quite interesting highlights coming in from that, wherein Reliance is saying that they're going to be launching the 5G by Diwali 2022 in 5 cities and pan-India by December 2023. Not just that, they're going to invest 75,000 crores in the OTC business over the next 5 years. So that was about Reliance, and the stock was also quite very volatile. But along with Reliance, the defense stocks were seen to be buzzing. You pick any particular name, even Moscow Dog, BEM, BEL, HAL, all were seen to be buzzing. And lastly, we did have a focus on all the fertilizer stocks on the back of the exclusive, 18-hour exclusive, where we tell you that the Deepa Mulls, the OFS in RCF, National Fertilizers, and not just that, even Moscow Dog was one such name that we got you for the list. But today, Cheryl, definitely the broader markets did perform well in comparison to the headline indices. What's it?
Absolutely, Shrishti, and not only today, of late we've seen broader markets outperform the benchmarks. Even remember last week, the broader markets actually gained in trade, while you had the benchmark indices decline for the week. And that's today's trading session, like the way how even Shrishti mentioned that we did recover from the day's lowest point. Nifty recovered approximately 150 points from the day's low, but that was not enough to pull us back into the positive territory. So you saw Nifty see the biggest percentage drop since June 16th. Remember, this is the Nifty actually ended lower for a second trading session out of the last 3 trading sessions. Broader markets outperformed the benchmark indices in today's trading session, as mentioned earlier as well. Nifty mid-cap as well as small-cap index, both of them saw recovery of approximately 2% from the day's lowest point. Talking about Nifty Bank, that's the one that underperformed the benchmark indices in today's trading session, seeing the biggest intraday decline since June 16th, and all the constituents on the Nifty Bank were trading in the negative territory, barring the IDFC First Bank. Talking about IT index, was also the top sectoral loser in trade today, declined approximately 1,000 points in today's trading session, and it has actually declined over all the constituents actually on the Nifty IT index, declined over 2% each. Tech Mahindra was the one that saw a biggest jump, biggest downfall in today's trading session, 4.5% downtick coming in for Tech Mahindra, followed by Mindtree as well as L&T Infotech. And talking about oil and gas, that's the one that saw a sharp recovery from the day's lowest point. Nifty oil and gas sector saw a recovery of about 2.3% from the day's low. It ended near the positive territory, and also FMCG index is the one that managed to claw back from the day's lowest point, gaining approximately 1.7% from the day's lowest point. So that's the way how the markets were in today's trading session. Started with the negative footing, from there on went on to actually recover from the day's lowest point, but then nevertheless nothing to be too perturbed about, given that we've been resilient in trade today, Shrishti.
Well, yes, and a lot of key levels to watch out for when we talk about the headline indices, and let's try to get a sense what are the next levels to watch out for Nifty as well as in Bank Nifty, and which are the counters looking interesting. Let's go across to our charters, and today we have Rajesh Palvia, who is the head of technical and derivative research at Axis Securities. Hi, a very good afternoon, Rajesh. Well, definitely it was a win-win for all the bears out there, but what's next? Because for Nifty as well as in Bank Nifty, although we tried to recover from the day's low point, but that was not a substantial recovery. And given the fact that all throughout the Indian trading hours, the Dow futures were significantly down, what are the key levels that one should be watching out for?
Yeah, good afternoon, Srishti. Good afternoon, everyone. So, देखिए, if we look at the overall setup for the market, as we have opened below 17,500 levels, so a lot of put writers have unwind their positions. We have seen huge unwinding action at the beginning of the trade itself, and now the put writers have shifted their base near to 17,100, 17,000 levels. So next major level based on the data setup is looking at around 17,000 level. So now until we are not able to cross above 17,600 level, we are seeing that market may witness further more pressure from the here onwards, and maybe market can go down further towards 17,200, even 17,000 level in coming trading session. So sell on rise should be the strategy as of now. One should keep a stop loss of 17,600 for going short in the market, for lower target of 17,200 as well as 17,000 level. And even on the bank nifty front also, after this today's gap down, most of the put writers now have shifted their position to 37,500 level. So the major shift has been done in this today's session from the put writers front, and call writers were very aggressive at the lower strike price. So for bank nifty, we are expecting until we are not able to cross above 38,800 level, the pressure will going to continue further, and maybe bank nifty can further go down towards 38,000, even 37,500 level on the lower side. So for both the indices, we are having view for sell on rise. We are keeping stop loss for nifty at 17,600, and for bank nifty our stop losses at around 38,800 to remain short for lower target of 37,500.
So that's the strategy that you're adopting, Rajesh, and that is sell on rise strategy for both Nifty as well as Nifty bank levels. So in this particular market scenario, what sort of stocks are you actually advising your investors or your viewers to take a look at?
So the major trigger for today's fall is IT, and the other sector was banking. So these two sectors are major trigger for the index fall. But still, there are so many stocks which are still showing outperformance. So we have identified 3 stocks where we are giving buy recommendation, because stock specific momentum is still there in the market. So first stock is Coal India, as we have seen that a strong rally in the last series, and the continuation of uptrend is still there in the Coal India, and the series of higher top higher bottom formation is there. So stock looking bullish on the near term as well as on the short term time frame. We are expecting 240 to 245 target with stop loss of 224. Second stock is from the mid cap space, that is Titagarh Wagon Limited, TWL. Stock is in continuation of uptrend. Stock is showing higher top higher bottom formation, the kind of buying interest we have seen in this down market also. The stock is poised for upward target of 175 in the near term basis. One can keep a stop loss of 159 to buy TWL. Third stock is from chemical space, that is Tata Chemical. We have seen a strong recovery in the stock after the gap down, and the kind of setup which we are seeing on the daily as well as on the weekly basis. We expect that Tata Chemical can continue its upward momentum towards 1175. So one can buy Tata Chemical with stop loss of 1114.
So 3 buy calls coming in from Rajesh, and just to recap for the benefit of our viewers, it's a buy on Coal India, buy on Titagarh Wagon, as well as buy on Tata Chemicals. On that note, thank you so much, Rajesh, for joining us on the show and giving us a take on the markets, as well as sharing your pick with our viewers. But let's head across to my colleague Pankaj, who's joining us for more insight from the charters that he's picking up from the dealing room. So Pankaj, over to you.
When we talk about the markets today, there were a lot of events that markets had to deal with. Among that, the markets, particularly did quite well off the day's lowest point. But nevertheless, there was a lot of volatility in the initial parts. Markets did go up. There is uncertainty as far as flow is concerned. There are mixed flows coming in across the desk. So there are a few events. Firstly, Reliance AGM is now behind. What the Fed has said has been absorbed by the global market. So these are the 2 things that markets was grappling with today. Defense stocks did see some amount of FII buying in today's session, and that was the key thing to watch out for. In fact, some of them even hit, an all-time high or a fresh new 52-week high, and that's why they were in focus. FMCG did see some delivery-based sort of DII, HNI sort of buying is what I'm being told, and that's largely led by the sort of environment that you are seeing across inflation, across what's happening in. And IT did see FII selling, not because of, what's happening to rupee, but it's largely because of recession fears in Europe as well as US, or growth slowdown, which could lead to a massive cut down as far as entire spending is concerned. And that's the key thing that everybody is actually talking about. How much will it impact the IT sector? So there was mixed flows. Defense did see buying, FMCG did see buying, and IT saw a lot of selling in today's trade.
Well, thank you so much, Pankaj, for highlighting all of those details. While the screen majorly was red today, but a couple of counters did really well. On the breakout and a breakdown stocks, we are getting Q1 breakout stock, and on radar is Indian Hotels. A very interesting chart pattern on this particular stock because it saw no stopping in today's trading session. It was an all-time high for this particular stock with a very strong green candle onto the daily chart. If you can see, the stock just moved from its 20-day moving average, and it was a bullish engulfing where it covered the previous day green candle, and not just that, it was supported by a positive OI addition followed by the stock move. So this is the breakout candidate which was on our radar, and apart from that, on the breakdown counter, we spotted Emphasis because all the IT pack was under pressure. But what kind of a chart pattern is building up in Emphasis is quite interesting because it's not just at the 52-week low. What you can see, it was a very strong support line, and this time the stock is trying to break past that support line. So let's see whether this breakdown in this particular stock is going to be sustained in the times ahead, or maybe it can bounce back from all of these levels. But for the on the price action front, if we can see, then the stock is trading below all its key averages, and it is being supported by derivatives data as well, where the OI addition is on the positive side, but the stock was down 4% in today's trading session. So that was the breakout and breakdown. Back to you, Cheryl.
Thank you so much for that, Shrishti, for summing it up for our viewers. Let's move on and let's get to a word from Wise. And today we spoke to Manish Dangi, who is the macro investor and advisor. And he says that Indian equities may not see major sell-off, but he also believes that bonds can spike to 8% going ahead on back of global uncertainties. What else did he share with us? Here out.
The typical short trade or long trade would be what played out between October 2021 until June, June end that we discussed, which is macro actually starting to get worse because of high crude prices, emerging market currencies getting gaslighted again, including INR. And while I continue to think that India's setup from a pure macro and its microeconomics actually seem reasonable, and to that extent, Indian equity may not sell off as much, but still, we are more likely to see downsides than upsides. So to that extent, be a nuance short on equity as well. I also see that, that will be the climax of bond, that in that period is when you will see peak bond yield, perhaps, going all the way to 8%.
So as an investor, what should be the tactical stance that you need to take so that you don't get caught on the wrong end of either side of the volatility?
Yeah, so if you're a systematic investor, you don't care, right?
Obviously.
Every month you keep putting in money through SIP or dollar cost averaging. If you're a speculator, then you ought to be, clear about this, that you're very likely to get whipsawed if you play momentum. So the reasonable strategy in this setup is contra. That whenever the IVs actually fall, whenever market becomes sort of complacent, actually pile a trade opposite of the market's direction. So that's the speculator's view. If you're an asset allocator, which is actually doing overweight, underweight on bond and equity, I guess it's still time to stay underweight equity, for some time to come, until, you have these clouds disappear with respect to, inflation's outcome.
Okay, so a bit of a cautious tone when it comes to equity, but with this, it's time to slip into a short break, but we'll be right back for more.
आग को फैलने से रोकना मुश्किल।
And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement, and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees,
Welcome back. You're watching Your Trades on ET Now, and the big focus today was on Reliance AGM. No major surprises at the Reliance AGM exactly, wherein Chairman and Managing Director Mr. Mukesh Ambani does not lay out the clear roles for the next generation nor shares any updates on the spin-offs. However, he announces the major capex for its OTC business and the 5G launch in Diwali and plans for FMCG segment as well. Let's get my colleague Somit, who is here to tell us the key takeaways from the Reliance AGM. Take it away, Somit.
Well, firstly, to start off with, on the telecom business, the company's chairman Mukesh Ambani said that they will invest close to 2 lakh crore rupees for 5G. Now, this also includes the spectrum capex that they have already done of close to 90,000 crore rupees. So another 1.1 lakh crore rupees is what the company is going to invest on developing the 5G network. Along with this, they also said that they will start 5G services in Diwali this year in key cities, which will also include the metro cities. But by the next year of December, that is December 2023, it will deliver, or it will start pan-India 5G services. And on the product side, it said it's planning to launch Jio Air Fiber, which is a hotspot device which will provide high-speed 5G data services at home. And on other product that it said it will launch is the Jio Cloud PC, which is expected to replace personal computers. So these are the two big product announcements that the company has done on the telecom side. It also said that it is still working with Google to make affordable 5G phones in India. Now, moving on from the telecom business, for the O2C business, it has laid out a capital expenditure plan of close to 75,000 crore rupees over the next 5 years, which will be deployed to start new O2C value chains. And when it comes to the new energy business, it said that it will build India's first and world's largest carbon fiber plant going forward, and the first phase of this is expected to complete by 2025, and it expects carbon fiber to lead the growth for the O2C business in coming years going forward. On the new energy business, it also said that the 10 gigawatt solar PV cell and module factory is expected to start production by 2024, and it is planning to increase its capacity to 20 gigawatt by 2026. It also starts to start production of the battery packs by 2023 and scale the production for battery packs to 5 gigawatt by 2024 and nearly 50 gigawatt by 2027. Along with this, it also said that it will set up a 20 gigawatt solar generation capacity which will be developed by 2025, and the entire energy that will be generated from this will be used for the captive purpose. Along with this, the company also said that Mukesh Ambani will be leading Jio, Isha will be leading the retail business, while Anant is looking into the new energy business going forward. And lastly, the chairman Mukesh Ambani also said that it is expecting Reliance Industries to double in value by 2027.
Thank you so much for that, Somit, for actually summing up the major highlights of the Reliance Industries AGM. And talking about Reliance Industries AGM, here are Mukesh Ambani actually talk about the 5G rollout, when they plan to launch it in India, as well as the capex that they've planned around it.
Jio 5G will be the world's largest and most advanced 5G network. Most operators are deploying a version of 5G called non-standalone 5G, which is essentially a 5G radio signal that is delivered over their existing 4G infrastructure. This non-standalone approach is a hasty way to nominally claim a 5G launch, but this approach cannot deliver the breakthrough improvements in performance and capability that are truly possible with 5G. In sharp contrast, Jio will deploy the latest version of 5G called standalone 5G, which has absolutely zero dependency on our 4G network. To build our pan-India true 5G network, we have committed a total investment of 2 lakh crore rupees. Jio has prepared an ambitious and the fastest ever 5G rollout plan for a country of our size. Within the next 2 months, that is by Diwali of 2022, we will launch Jio 5G across multiple key cities, including the metro cities of Delhi, Mumbai, Chennai, and Calcutta. Subsequently, we plan to increase the Jio 5G footprint month after month until by December of 2023, which is less than 18 months from today, to deliver Jio 5G to every town, every taluka, and every tehsil of our country. We will use our combined wireless and wireline assets to blanket the 3.3 million square kilometers of India's landmass with fiber quality broadband, connecting even those parts of the country where thus far satellite technology was considered the only option for connectivity.
So that was top boss of Reliance announcing their future plans, but the stock ended in red today with a cuts of around 0.7%. But in today's weak market, the defense stocks were gaining like anything. You talk of any name, be it BEL, Coaching Shipyard, all of them hitting a 52-week high. But what's the news flow and why the buzz? What's the buzz? Let's go across to my colleague Awan Dubash to explain more.
Well, in an otherwise dull market, here's what's standing out. Defense stocks are doing very well in trade today. What has hit their 52-week high include the likes of BEL, Cochin Shipyard, Mazga Ship, while the likes of HAL, Paras Defense, MTAR, Midhani, they're all abuzz in today's trading session, and that's largely on the back of the announcement that was made over the weekend with the defense minister saying that they've approved a positive list. This is to promote the defense industry in India. So the third list of 780 component subsystems is going to be procured from the domestic industry. There's a ban on import which kicks in. This is going to be under a staggered timeline of around 6 years. The list comprises pretty much replacement units, subsystems and the components that are used for various military platforms, equipments and for weapons. Now the aim is to minimize the imports by the defense public sector undertakings, and this timeline is set from December 2023 to about 2028 December. The indigenization of items is going to be taken up under the make category, which basically involves greater participation of the Indian industry in the defense manufacturing. The DPSUs will be floating the EOIs as well as requests for proposal soon, and naturally the government wants to reduce the dependence on imported military platforms. They've also taken many such steps in this vein. This is the third list, and the government has set a goal turnover of $25 billion, which is close to 1.75 lakh crores in defense manufacturing, as well as a target of $5 billion worth of military hardware over the next 5 years.
Thank you so much for that, Awan, for putting into context what's actually driving the rally for the defense counters. But let's move on to an ET Now exclusive. And Deepam has actually started gathering investor feedback for launching OFS or fertilizer PSU, that's RCF and National Fertilizers, and also for defense PSUs, namely Hindustan Aeronauticals as well as Mazgon Dock. And sources have told your channel that Deepam may come out with the next set of OFS soon. Meghna Mittal is here with all the details. And Meghna, tell us what exactly the government is planning and what's the timeline looking like to you?
Right, so what the sources are confirming to us that Deepam has started testing the waters for its next set of OFS. Now we know that in this year ONGC was the OFS that it has come out with. After that the markets have been volatile and it has held back. So now what the sources are confirming to us that it has sought investor feedback on the OFS in 4 PSUs, 2 of fertilizer PSUs, the RCF and NFL, and 2 defense PSUs, the Mazgaon Dock Limited and Hindustan Aeronautics Limited. Now in NFL, Deepam is aiming at a 20% OFS stake sale via OFS. In RCF, they are planning as 10% stake sale via OFS, while in the other 2 defense stocks, it is yet to decide on the quantum. And after a week's time, after they get the investor feedback and they analyze the markets, they will be deciding on the quantum of stake sale via OFS in these 2 defense PSUs as well. And what the sources are confirming to us that if the feedback is positive, that is likely in a week's time, they are likely to come out with the OFS as early as a fortnight. So that might be the second OFS after ONGC in this financial year. We know that 65,000 crore rupees is the big target that Deepam has ahead of it for this current financial year, and it's still way behind it. So definitely these OFS will definitely help defense stocks. We know that they are on a high, they are buzzing, so might be a good time if the investor feedback is positive that they may come out with it very soon.
Well, thank you so much, Meghna, for getting us all those exclusive details. But coming back to markets, global factors are playing a big role into the markets. We're talking of tomorrow. Which are the cues to watch out for? Let's tell you that. From the global world, we'll be watching out the economic cues on the front of China, composite and manufacturing PMI. And from the US markets, we'll be keeping an eye on the job openings as well as the consumer confidence index, and the reading this time expected is as 97.2, a tad lower from 98.4 that was reported in the previous month. FOMC member Williams is also going to be speaking, and we are reacting to the Fed comments, so a close eye on that. But talking on the corporate front, a lot of AGMs are lined up, wherein we have AGMs like ICICI Bank, Coal India, CCL Products, VMart, NTPC, SIS are some of the names that have their AGMs for tomorrow. And from the corporate action, it's going to be an X date for Heidelberg Cement, Vedanta Fashion, Piramal Enterprise, and lastly, do keep a watch on INX Wind as well as HOEC, where both of these companies are going to consider their fundraise plans tomorrow. So we'll update on that trend as well. But Cheryl, we keep ending the show on a very interesting Did You Know What's in the Store today?
Absolutely, Shrishti, like you mentioned, a very interesting Did You Know, and we all know that the Jackson Hole Symposium, in that Jerome Powell gave an 8-minute speech, and that speech was actually the shortest ever speech by any Fed chair at Jackson Hole Symposium since 2010. So that's the word count for 2022 was 1,301 words only. So yes, it was the shortest speech by any Fed chair at Jackson Hole Symposium since 2010, and it was just for 8 minutes.
Well, that's a record, but for this, it's time to end this edition of Your Trades. Thank you so much for watching.
Anand Radhakrishnan, Managing Director and Chief Investment Officer with Emerging Market Equities, and Franklin Templeton joins us now to take our conversation forward. Anand, thank you for joining us. Just when things were looking settled, US Fed has set cat amongst the pigeon by saying that the war is not over and it could have collateral damage on the economy in the near term. So are we going back to that same ugly template, a fear of slowdown and a real risk of high energy prices coming back in winter?
While the battle with the inflation is like half won, I think the Fed chairman's comment should be seen in the light of what is more in store. I think if you dissect the inflation globally as well as in US, at least half the drivers of inflation is cooling off, which is inflation coming out of manufactured goods, inflation that is driven by metals, inflation that was driven by bottlenecks in global logistics, shipping, ports, etc., are significantly cooling off. And we might have seen the worst of that and the peak of the manufactured inflation already. However, I think the other track of inflation, which is services inflation, which is driven by employment, wages, rent, etc., is still raging, and I think they are yet to peak out. And in that sense, the battle is half won, if I may say so. So clearly, the commentary kind of puts in light the challenges that are there in front of Fed, how they are struggling to kind of effect an orderly wind down of inflation without affecting the macroeconomic stability, the market prices, the volatility in asset prices, etc. But having said that, I think I would say that it is not that we are going back to square one. Significant policy actions are already in motion. We have seen a near normalization of interest rates to pre-pandemic level, but we are yet to see the liquidity to normalize. Probably it may not normalize in any near term, but at least directionally it will trend to go towards that. And once that is in motion, we would see probably the inflation fears calm down. I think the consensus kind of predicts that by the end of the current calendar year or the early next year, the peak should be behind us globally as well as locally.
Anand, but what does it do to the market? This morning, Uday Kotak, in his usual style, tweeted, and I'm going to read it out to you, saying that the Fed Reserve Chairman Jerome Powell has finally spoken firmly to fight inflation. He says it reminds us of Paul Volcker, who broke the back of US inflation in 70s and 80s. Watch out for quantitative tightening now. He says US rules the financial world. Opiated markets will wake up and smell the coffee. I want to talk about the market part here, Anand. And does it seem like, maybe not even June lows, there could be some serious correction in the market? Because up until now, the markets were, assuming that inflation is going to be transitionary in nature and central bankers are going to, rein in very soon.
It's a colorful tweet, I should say. But, one of the drivers of in the inflation is essentially the tight labor markets as well as the property prices. If you look at in US, which is where the bulk of the global equity markets seem to be pivoting towards, US inflation, US macro, US markets, etc. I think the property prices are still, the median home prices, which we normally track, is 30 to 40% above their pre-pandemic levels. And even specific states like California, I was talking to a few of my friends and relatives, is upwards of 70, 80% the median home prices. And this has an impact on the pass-through inflation, the wages, etc. And this is driven by record low rates, record high liquidity, etc. And therefore, it will be very interesting to watch how inflation is brought under control without impacting the high property prices, the tight employment that we have seen, and high wages as well. So yes, there is significant challenges. It has to climb, as I say, the wall of worries into the next 3-6 months before we can clearly call out. Market will every now and then will try to be brave about it. We'll try to hazard a guess. And therefore we should be prepared for that amount of volatility. Now, one of the thing about the policy making is it is half numbers and half expectations. So it's Fed chairman's and the other policymakers' duty to talk down the expectations, to bring down the inflation expectation, to make it more sobering for people to place their bets, if I may say so. And those are, I think, part of the it's a verbal communication which goes hand in hand with the policy communications.
Okay, inflation aside, Anand, that morning I wanted to talk about the overall portfolio and financials. Large cap financials, those definitely stand out, the likes of Axis, HDFC Bank and ICICI Bank. A recent sell, though, has been SBI. So it's a conscious call then to stick with only the large caps?
Now, within the Indian banking sector, I think the sector itself is pretty favorably positioned after having gone through a huge NPA cycle, high provisions, etc. I think we are on the cusp or the verge of starting in the new credit cycle. The credit growth numbers seem to be pointing towards a healthy resumption in the credit growth, driven by both working capital demand as well as capital expenditure demand. So we are very early into credit cycle, and I think there are enough data to suggest that the banking sector has gone through a fair amount of consolidation, and the top 6-7 banks have kind of gained market share over the last 5-6 years, both deposit market share as well as credit market share. So I think our predominant bet within that sector has been with the large banks which are both well positioned both in corporate credit as well as in retail credit. I think both growth as well as cost will be tailwinds for the banking sector, and their valuation